So it's a new week. It's Monday. It's currently a US bank holiday, so we haven't taken any trades today. I just marked out the 8 a.m. 15-minute candle, and yeah, market just sold off today. Nothing doing. So what I'm gonna do today is I'm gonna do a review of Thursday and Friday's price action last week, and potential setups and why I didn't trade those days. And yeah, so I've got some notes here for each of the days. So on Thursday, what were we looking at? It's been a while now. So anticipating a tap of the fair value gap and a retest of midpoint before 9:30, then head back through and fill the fair value gap. So in respect to this, I was expecting price to sort of tap this fair value gap, retrace, and then um, tap the midpoint and then fill the fair value gap, and the entry would have been on the midpoint to take that fair value gap. That would have been the full target for 3 to 1. And pretty much what happened was we just didn't get that to the midpoint. Price sort of respected above it and then went. So yeah, no trades for me there. And if we look at what else I have on the notes, price filled the fair value gap before 9, sit and wait. Yep, so I was just being patient. And I noted that the Asia low had been untested. So this could be, potential bearish target, which in the end it was. As you can see, price traded up to where TP would have been and pretty much to the pip would have then sold off, or I did sell off. And yeah, I was exercising a bit of caution. Price moved similar to the day before. So in terms of that would have been, whoops, that would have been like here, where we traded up before 9:30, had that slight wick at 9:30, and then sold off. So it's kind of similar. Price traded up into a fair value gap. This in this instance on the Wednesday, traded up above a high. So yeah, 2 losses last week. So I was a bit more cautious, and yeah, I just wanted to wait for the 15-minute candle closure at 9:30, which, as you can see, was quite a bearish candle in the end before the sell-off, break through the zone, and then further down. Price did respect the top of the zone, but I was hesitant on my entry, and yeah, move looks to be missed. Still not completely comfortable with entries, not on the midpoint. Is my learning point for Thursday. So I need to, because as part of the model, you can take entries off the midpoint or the top of the midpoint if you're bullish, or off the bottom of the midpoint, if off the bottom of the zone if you're bearish. So it's one of those. I think it will just come with time, just getting more comfortable. It's normally because I have like an order set up, and I have like a buy limit or a sell limit in place. So if price doesn't come down to my entry, then I don't have the position set up correctly, and I'm just not as well, it's a bit more difficult to set that up in real time, and I'm still just a little bit unsure on like how much confirmation I need above the zone in order to do that. So if we zoom back on the 1 minute and then come in here, so let's drag that across, keep zooming in, pop. So you can see here, price broke upwards from the zone, traded back down, and we had what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles, all closing above that zone and sort of respecting it there. So in hindsight, yeah, that's enough confirmation. But in the moment, it was more like, we've still got this low down here. It could reverse and it could just be wrong. And, after 2 losses on the week, think I was just more hesitant, more cautious in my decision making. So, that's absolutely fine. I was correct in being cautious, but the execution could have still been profitable today in line with the model. So it's one of those, no problems with Thursday. If I was to take the trade off the top of the zone here, it would be a 2.72 to 1 risk to reward. So, it still would have been fine. It would have been a nice trade, but again, just didn't enter. So what I can do from here is if I take that off, and then if we go to Friday's moves, what notes have I got? Previous daily low, previous daily high setup. Note that for Fridays, there tends to be more manipulation earlier before the move. Stuck to my rules and didn't trade, but there were still opportunities around 10 a.m. and noted that the 8 a.m. candle was more than the 10-point max range that I like to trade for the break and retest. So as you can see, 6824 all the way down to 6805. So that's like 19 points. So yeah, it's a bit much of a range, but there was still an entry. Obviously the previous daily high, previous daily low won't be marked out on my indicator, but it was this red line here. So you can see price traded below the London low at that time and the Asia low. We got a 5-minute inverse fair value gap, the breaker structure here, 1, 2, 3 candles, fair value gap here. So the entry could have been here, but it would have been stopped out if it was below the inverse. And yeah, as you can see, there was quite a sweep at the within the first 10 minutes of the market opening. So this would have taken out the break and retest anyway, but the underlying position that could have been taken would have been this 3 to 1 here, on the tap of the midpoint at 9.55. So that would have been really nice. We had this fair value gap, which it would have been like just above that fair value gap. And pretty much, yeah, this is one of the reasons why I don't like trading Fridays. Like, you can still trade it. It's just very, very choppy. And, the actual direction price tends to move is usually, towards the end of the AM session. As you can see here, 1025, 1035, all the way up to this fair value gap, which I believe is the one that we marked out from. So I think that might be a 15-minute. Yeah, so this 15-minute fair value gap. And yeah, that was the draw, with the PM high being the next draw, and then this imbalance here, which didn't quite get taken. So, if we'd gone all the way up to that fair value gap, there could have been 7.3 to 1. But then again, my rule is I don't trade Fridays with red folder news, because my win rate just drops on Fridays. I tend to find my emotional patterns. I get more sucked into the price action, and I just end up taking like 1 or 2 trades, and they tend to be losers. So it's one of those, I just sort of stay away from Fridays in general. And plus, it puts a bit of a dampener on your weekend if you lose a trade on a Friday after a good week. So, but yeah, since then, price has retraced back into this range, tapped the midpoint again, and since then we've obviously had today's London session, which saw a little move up, and then just sort of a sell-off. Is this into the weekly opening gap? Yeah, so we've sold off into the weekly opening gap, and sort of just consolidated around there, being a bank holiday. So yeah, quite a lot on the S&P to take in there. It was a similar story on the NASDAQ. I tend to, at the moment, I am preferring the S&P just to trade on, but I am using the NASDAQ as as a comparison to see what's going on, if there's any SMTs or anything. But yeah, like on Thursday's move here, you can see from 8:30, price just ran straight up and then traded down slightly above the midpoint and sold the fuck off. So yeah, this blue line here, this was one of my targets for the Nasdaq, and we still have this. That's a lower time frame high marked out there, both of them. So yeah, I think it was kind of similar on Friday as well for Nasdaq. Yeah, it would have been wicked out on the break and retest, but there wouldn't have been another tap of the midpoint from there. So the S&P would have been cleaner on Friday. As you can see, we get it all the way back down from this fair value gap. Tap, bang. So yeah, that is the last couple of days of last week. So we took 2 losses, and that brought our P&L down from like 350 to 132. So that brings us just about break even for the year so far. But then again, you know, lots to learn whilst I'm using this model. And yeah, so Friday CPI we had, and it was yeah, not trading it basically. Yeah, as you can see today we got a bank holiday US. Tomorrow I think we have Canadian CPI, Empire State Manufacturing Index. That might have a little bit of a impact on the markets, but I wouldn't anticipate too much. And then Wednesday we've got FOMC minutes. That would be from the previous meeting, I believe. More hawkish than expected 8 times per year, 3 weeks after the federal funds rate is announced. Yeah, so I'll just be recapping. Thursday looks pretty good with unemployment claims. Obviously, that's still continuing to rise at the moment in the US. So, again, I'm thinking Tuesday to Thursday is just sort of my trading window, really. Like Monday's a bit slow, or you know, you can hit a nice trade on a Monday. Fridays I don't really like to trade. We've got red folder news again, so yeah, it's just one of them. Just have to stay patient going into the week and see what opportunities arise, what we can get. I will just remove some of these drawings off my chart actually whilst I'm here. I'll keep them ones, bin them off. Where's all the notes? Do I delete the notes? Yeah, noting that the 8 a.m. candle, so Friday later moves. That's what we're taking from that. So yeah, I'm just going to keep these main points of interest marked out just for reference. You know, if price does end up dropping below these 2 zones here, then we're probably in for a bit more of a bearish run. You know, maybe down to this volume imbalance on the daily. But again, that's still a lot of points for the S&P to move. I'm not saying it's impossible, like with this current climate, but that might take a little while before we get down there. You can see that's about 600 points on the S&P, which is a lot. So definitely a long-term thing to keep an eye on. But other than that, we've got plenty of highs up here. Just a lot of sort of ranging at the moment. So yeah, like I say, I will be back tomorrow with a market recap if I take any trades or anything. And yeah, I'll go through that then. Until then, I'll catch you in a bit.